Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a Forex market analysis for February the 22nd through the 26th. And we are going to first show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And if you haven't already done so, please subscribe to our Twitch or our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Okay, so we have our Forex-Trading-Unlocked.com website pulled up. We already have a workstation page also pulled up, which you can access from our navigation bar. And we have a Dixie chart here showing you how last week the dollar index started to come back and fall apart, especially the last couple days of the week. And today we have a punch in the chin on the dollar today. It took one pretty hard right off the bat. So we're going to go over that and show you which ones are driving this dollar index lower today. Okay, so with that, we're going to start off with the biggest component in the dollar index, which is the euro. Today, as you can see, it is slightly higher. It's made a higher move high on the day, but it still has not taken out this high from a week ago at $1.2171. That is our key breakout area to the upside as far as confirming that we definitely have bullish strength once again as far as the euro is concerned versus the US dollar. So today's trading is going to really help to set the stage for the rest of the week. The dollar has been on edge recently in some currencies, and it's been stronger in some other currencies. We've had a lot of divergence. However, today we have definitely the dollar bears starting off the day pretty strong. And I think one of the reasons you're going to see that is because of the fact that we have gold, which is also rallying today. So if you look at the price of gold, it's at 1,804. So yeah, it's up about, what is it? I had a low the other day of around 1760, so it's up $55 or $45, excuse me, in the past couple days. So a little resurgence there. However, this market's making lower move lows after a lower move high, so it is trending lower. The Treasury bond market also is on its lows as well. Now, this is the part that may help bring the dollar bulls back into place, or definitely shape dollar strength in certain markets, which we'll get back to. So right now, we have made, after this bullish engulfing line, we had hit our target actually back here a week and a half ago, and then spiked through it a little bit more last week. Now the question is, can we go higher? So we'll take a look at our, where is it here, the Euro US dollar here. We have our NinjaTrader platform, which you can download the NinjaTrader platform on our website on the home page. Just go all the way to the bottom. There's a banner for NinjaTrader, and you can get the platform for free, the data for free. We also have on the navigation bar, there's a way of accessing that too. So the bullish engulfing line that we had set off a few weeks back, we had hit this first target right here, right around $1.2149. Then we spiked through it a little bit more last week. We came back, made this higher move low, and now we're pressing resistance. So a higher move low after a lower move high already puts us on the neutral campaign. So if we take out this high from the other day, which it looks like we're going to make a run for that over the next couple days, then our next target is $1.2196 to the upside, with $1.2243 being our extreme upside target for the Euro US dollar. So as far as that's what we're looking for upside follow through. So if we have continued dollar weakness, its odds are that we will continue to see the Euro US dollar continue to make newer move highs. One thing that you have to take into consideration is the 30-year Treasury bond. If it continues to make lows, meaning the yield goes up and interest rates are going up, then it's going to be very unlikely that the dollar is going to completely fall apart versus most of the other currencies that are out there. So that's just something you want to be mindful of and want to watch out for the next couple of days. And then your risk level would be the prior low from last week. So this would now be our key level here. Oops, that's not the one we want to move. We want to move this one. Okay, so this right here, sets our risk here. So $1.2018 is the base for any bullish trading right now. I think that if you fall back on support and take out that $1.2018, that would have us hard pressed to be bullish the euro US dollar, and that would also most likely mean that you're going to see it probably get back down towards that 119 area, even 118 half. So it'll be interesting to see what we get. Right now, we are bullish on the hourly and the daily. So let's look at the British pound US dollar. This is the second biggest weight in the dollar index. This is one of the reasons the dollar index really is falling apart. You can see that over the past 3 sessions alone that this market has continued to rally very strong. Now this is where we get into the commodity related trades. Oil is now trading at what is just under $61 a barrel. It has been on a nice upward trend for the past 4 weeks and is going to continue to do so with all of the actions that have been happening in the U.S. So as far as British pound strength, that is huge for them. You would think that with the lockdowns and everything that's going on that this would have a weakening effect on the British pound, but the strength of oil and also the fact that they do not have, just as we're talking right now, it's pushing new move highs. The things that are going on in the EU, the fact that the UK does not have to financially support the EU anymore, that is huge for as far as strength in the pound. So I think we're when you look at the British pound and you look at the euro, look at what that's doing. So just that's making new highs today. That's probably why the euro is not as strong against the dollar as the pound is. It's not making new highs yet. It's still having a little bit of reluctancy. And then also as far as any type of pullback in the pound also means that you're most likely going to see a bigger pullback in the euro versus the dollar. So we've shown you where strength is. As far as what to do with it, that's a whole nother story now. So let's go back to the British pound US dollar chart here. Let's see, we got some people on Twitch and some people on YouTube watching us. If you guys got anything to say, don't worry, just chime right in, ask a question. Let's see, and then we have, let's see, there we go. Okay, so British pound US dollar is making new move highs as we speak. We can take this, we'll move this to here. And these are our 3 levels, $1.38.33, $1.37.75. Below here, that would be something that would set us up for probably an extended correction to the downside, with $1.35.66 being our biggest support pivot to look out for. But right now, I wouldn't try and jump in front of this freight train. The only way I could see validating any type of sell signal you get would be as if we have a harsh sell-off in oil, meaning that it drops back below $60 and gets back down to like $58, $57 a barrel. Something like that I could see would help to drive a correction to the downside. But until that happens, and especially as the pound continues to make new move highs against the euro, I think it's going to maintain its posture with this. So we don't have any upside targets except for $1.4250 actually, which is that's a lot to go yet. So that would take us another couple days. One thing about the pound, you never know when this thing lights up. It has monstrous either swings in one day or it will trend in a very, very strong way, and then possibly set a short-term top after something like that. But right now, the trend overall isn't that steep, except for over the last week and a half. I think that that's going to smooth out, kind of generate a sideways trade like this, buffering it down a little bit, where you'll see probably some profit-taking sell-offs over the next couple days to kind of test support a little bit before we have another wave higher. This upward sloping support line here, I think that odds are we're going to maintain a bullish trend. We are making higher move highs and higher move lows, which definitely is indicative of a trend. So, and from the long term all the way to the short term. So we will be monitoring this one, and like I said, if you are bearish this market, I would wait till you really have a confirmation with some other markets to give you a real reason to try and sell this one, because this one's a rager. Even if the dollar was to become a bull versus all the currencies in the world, the pound, I think, was going to be one that's going to have a little bit of reluctancy. US dollar Swiss, let's see what's going on here. Oops. It's US dollar CHF. All right, so what do we have going on here? We had a bullish engulfing line buy signal that set a higher move low the other day. And then, I can take this out. This was for a prior webinar. Okay, so what do we have here? We have a buy signal from over a week ago. Today, you can see that the US dollar Swiss actually spiked really high today. It made a higher move high after having made a higher move low on Friday. So I would use this low here as a short-term buy area, where anything below that will probably have us testing this upward sloping support line, and a failure from there would have us back down towards this 88.72 area. I think, like I said, when it comes to the pound, like this is one of those currencies where you could start to see the strength in the dollar is holding back and restricting the euro, as well as the strength in the dollar versus the Swiss also shows that there's merit to dollar strength out there. It also shows how much divergence we are now having in the currency environments out there. The post-Brexit era now means that the British pound in the UK is free floating because of their sovereignty being regained, and also the fact that their debt load doesn't increase at such a high rate. Let's see, Radivos, hola a todos. Hello, everyone. Yes, hello to you too. I would continue to watch this market press higher move highs and higher move lows, because that is the trend so far on the daily and on the hourly, until it confirms otherwise. So that would be a critical pivot here at 89.34. So the low of Friday, if we take this out, I think that would put us more in a neutral stage, because no matter what, the overall trend has been higher move highs and higher move lows for the past month and a half. So you don't want to fade the trend. I would look for a buy dip situation, which it may be in already today. So remember that we have the weekends to trade that, the gap of the weekend that we're dealing with right now. So the U.S. stock market is now open. The Treasury bond market is just slightly higher than it was on Friday. But that was after pounding new move lows, and the Treasury bond market is at a very low point right now. It's in an area where it's starting to really impact inflation. It will be inflationary no matter what over the next couple quarters, should it stay where it's at and not get a bounce. And the question is, how will it get a bounce? I think the only way it will be during a couple of the auctions that the Treasury Department will be working on over the next couple of months, because there's a big rebalancing of over $6 trillion of U.S. debt besides any new debt that they're taking on. So that means we're going to have a lot of high-value auctions going off over the next couple quarters, especially as we get closer to the summertime, because I think there's over 20% of the debt that has to be refinanced before the summertime. So that's a lot right there. That's already, no matter what, a couple $1 trillion, because we know that besides the 6.5, almost $7 trillion they have to do, there's the packages that they're coming out with and just the other stuff for whatever programs they're coming out with. So we're looking at probably $10 trillion over the course of the remaining 10 months left in the year 2021. This will have an impact on the currency environment. So remember, interest rates are a function of the pricing of currencies. So with the Swiss, no matter what, we still are looking for a challenge of this 90.48 level. Let's see if I have the U.S. dollar Swiss. We do have a chart up here. Okay, so interestingly enough, from our buy signal, we had fallen just shy of this projected high at 90.27. Remember, higher move highs, higher move lows are indicative of a bull market. So right now, I think the pullback you're seeing today is profit taking off of that high. It's showing that there is resiliency in the dollar as far as strength, but that right now, because of the pressure on the day, it is falling back. So as far as target-wise, we've maintained that. So now our next one would be a breach of this 90.48 area. This is the crucial area in which after that, then we would be able to In fact, let's just do a little projection here. You want to get a little price for the US dollar Swiss. So what we're going to do is we're going to take this low here. We're going to delete this out here, and we're going to take our risk reward indicator. So if 2 days ago was, all right, so if that low holds, our next target is just above this previous high around 90.48. That's our new target to the upside. So should we hit that area, 90.48, there you go. You're right there. That takes out higher move highs. Remember, after a higher move low, if you make a higher move high, it confirms that the bullish trend is still intact. Now, it's not a major move, so we're not looking for any super trend trade to take advantage of. However, I do believe that and especially with the way you see it trading right now, this a good short-term low-risk buy against 89.34 is not a bad idea, and definitely is down to 88.72. You have this as a risk area, looking for a breach of this area. Now, should we get above 90.48, then we will have some different targets for you. But for right now, let's look for that challenge that will get us through the next couple of days. Now let's look at the US dollar JPY. This is a very interesting trade. It has been falling back harshly over the past couple days. As you can see today, the US dollar was actually much stronger. So if on an intraday basis, it had made a higher move high, it's trying to find support right now. We have this 104.70, which is a major pivot area, and 104.40, which is really our biggest failure level of the trend. The overall trend for the US dollar yen over the monthly and weekly scale, well, the monthly is definitely still bearish. On the weekly, it's become neutral. On the daily and hourly, and hourly, it has been pretty much bullish, except for obviously the last week going into today. But like I said, with this rally that it had initially coming up here, that shows a lot of the strength. And I think that you're going to see, especially even if the dollar gets hit more versus the pound and a couple other currencies, that you're probably going to see a bounce in the US dollar Japanese yen. And this would be also indicative of the oil trade. If oil continues to rally, if you see the oil market, instead of pulling back and falling below 60, if you see oil make newer move highs this week, remember you have the oil numbers on Wednesday, and I wouldn't doubt that with what's going on in Texas, that any short-term pause right now is just that, and that we will see most likely oil prices surge up to around $63 a barrel before this week's end. Should we do that, that probably would also bring back the US dollar Japanese yen bulls. So right now, that's a key level for us to watch. Let's see on our Ninja Trader. What did we do here? We had the US dollar Japanese yen. Okay, so as far as we had this short-term sell signal here, which was the high from a few days ago. As you can see, we have, you know what? I have to update this real quick. All right, so we have our downside target objective of 104.68, which is a pretty interesting area also as far as support is concerned. All right, so when we have, so 104.68 down here, this is our downside correction target. This high right here, when you had this big green bar going into this red bar, and then this followed, it's the second day down there. This three-day pattern is called a three inside down sell pattern, which if you want to learn how to trade that, read the book, High Probable Japanese Candlestick Patterns. So as far as our projection from the Ninja Trader platform here, we have 104.68 as our downside target. Irony of it all is this 104.68 puts us right around this key pivot of 104.70. So that's a good target area. It also would be coming right around this sloping line here. Now the thing is, think about this sell-off. This rally has been in a fairly decent slope. It's not that extreme, but it's pretty strong. So the fact that we have sell-offs like this is very normal because of the vertical slope of the upward movements. Now the downward movements are not as strong, meaning they're indicative of making higher move highs and higher move lows. So should we find a base here around 104.70 and then get a market turn, that would lock in another higher move low and set us up for a run and a challenge back above this 105.76 area. Anything above 105.76 has us targeting every bit of 106 half up to 107 even in the US dollar yen trade. So that would be one thing I think longer term that you can watch out for. And it'll definitely be giving us probably a good buying opportunity over the next, I don't know, probably 2 to 3 days. So somewhere over the next couple days, especially going into the oil numbers, I think you're going to start to find a bottom. And like I said, especially if you see a big rally in oil over the next couple of days and off of the numbers on Wednesday morning, which they come out, right before 10:30 Eastern time, so it's 9:30 Central Standard Time where I am at. So it'll be interesting to see how that shapes things up. Now let's look at some chart busters here. Over the past couple sessions, we have had the Australian dollar, US dollar scream through new highs. A lot of this has to do with the commodity-driven trade, with the inflation in raw materials, especially in oil as well. I think you're going to maintain this posture and continue to see this over the next few days as far as more upside potential with this market. Let's see if I have the Australian dollar, US dollar here. Okay, so with this one, we did have a buy signal last week, or actually not last week, a few weeks ago. It was here. So take this off of the low, and interestingly enough, this puts us right there. Okay, so we just came through our upside target projection for the NinjaTrader platform. So does that mean that the rally is going to stop? No, not necessarily. This could keep on going. Now remember, Australian dollar, US dollar is a bull on the monthly, on the weekly, on the daily, and the hourly charts. Like, it is a bull, bull, bull. No matter what dollar strength comes into the market, right now, especially with oil being where it's at, it's going to be very hard pressed to have any major slides. So any type of correction or downside move right now would be something like this area here, which happened in January before we set this low at the beginning of February. And that is all we're looking for any downside action whatsoever. So be very, very careful trying to sell into this market. I think that the best thing you can do is to look for opportunities to buy this market. Also, the trend, if you look at it here, is, let's see, it's not that extreme if you look at it. As far as the slope is concerned, it's a little bit more than 45 degrees, but not that much. And for the most part, it has been very consistent with channeling higher. And once again, I think that you're going to have to watch the oil-related trade that will be coming into play with this one. So to the upside, we obviously are flirting with the upside target. Let's see if maybe we get a pullback. Now remember, this is a lot of adjusting with dollar weakness coming into the market today. We could have a turnaround Tuesday, tomorrow. So last week we had holiday markets in the U.S. and there was a lot of big numbers that came out. We have a lot of big numbers that are coming out this week as well. And the commodity numbers are also starting to really pull weight in these things. I mean, the price of lumber now is the highest it's been since 1974 in the United States. One of the things that's also ironic, we are coming into a period in the United States that we've already had before. It's going to be the 70s all over again. Now, if that is the case, if it's the 70s all over again, then that means record high oil pricing, which then it causes rampant inflation. Some of the most extreme inflation that we've seen in the United States ever was during the 1970s decade. And you are definitely going to see it over the next definitely 3 to 4 years for sure. That is not a trend that's going to stop. This is good for Australia, remember, and that's going to dominate this trade. Now, New Zealand dollar, US dollar is in a similar fashion as well. It broke out to the upside today. It made a higher move high, and it is continuing to hang just below it right now. I think with this one as well, you have a most likely you're going to have a similar situation. The upward sloping trend line for this market isn't that extreme. It's pretty balanced. The fact that it just came through here by attrition, this was a sideways move, and then now boom, it's made higher move highs. Remember, it came here down, made a higher move high, made a higher move low back here in January. It has since continued to grind higher move highs and higher move lows. So this one is not a raging bull, and I think that as dollar strength and the interest rate market starts to continue to trend where it's at, the New Zealand dollar is going to have a harder time rallying than the Australian dollar, even though it's commodity driven, but it's not as engaged as Australia is. So I think you won't see the momentum to the upside with this one, but then also I wouldn't expect any severe pullbacks either. All right, US dollar, Mexican peso. This is one we've been watching out for all you spring breakers out there, that we know you're going to still go down to Mexico, even though spring break was been canceled. Higher move highs on the US dollar, Mexican peso. We had a breakout to the upside today. We were wedging before, going into the middle of February, and then here, boom, we took off to the upside, confirming this bullish trend now today with a higher move high. We've been looking for 21 to 21 and a half pesos to the dollar. I don't expect to see that literally over the next couple days or anything, but I would say that as we trend into March, over the course of the next week to 2 weeks, we're most likely going to be above 21 pesos to the dollar. It's almost enticing people to go to Mexico. I actually know a whole bunch of people that have booked trips for the end of March, which is convenient. So that's going to be interesting to see how that trade goes. And I would think that you're going to see a lot of tourism going in towards that area. So not that tourism is the reason why you're going to see a move in the peso, but there's dollar strength is out there, and especially in the longer term, I think it will remain so and resilient against the Mexican peso, just because their economy has a lot of things to overcome, that's for sure, over the next year as it's coming out of the coronavirus trade. US dollar Canada, this is an interesting bear. It made a lower move low today, but it's higher on the day. This one is a grind. It's the oil trade. It's kind of like the pound and the Australian dollar, where it's going to be hard-pressed to see dollar strength come in any big way. It looks like it's trying to make a bottom here. It's been grinding around this area of $1.26 to $1.28 for the past since December. But it's been making lower move lows and lower move highs, which, as we know, is indicative of a lower trending market. This is the main pivot here at $1.2847. A breach of this area, besides taking out the longer term trend line here, would set us up for a correction higher. But any correction for the US dollar and Canada, I would have to say it would be better to view it as being nothing more than just a correction right now, especially with the strength in oil. Now, if the interest rate market really starts to fall out of bed and really press higher rates, and should we get a sell-off in oil, which I don't see happening in a big way, then maybe you'll see a big rally in the US dollar Canada. But that would be what we'd have to see for us to really get at that kind of a thing. So once again, be mindful of the Treasury Bonds, where right now they are on their lows and they are looking to continue to go further lower. Gold, interestingly enough, here you have this nice little bounce right here. This is another thing I want you to take a look at. Remember when we were looking at the yen trade? With this short-term rally in gold, this is helping to weigh on the yen. If this gold market starts to fall back down again, which is very likely, because remember, so far for 2021, this market has been making lower move lows and lower move highs. So if we run out of gas on this gold rally, then I would say you're probably going to see the yen also the US dollar start to rally against the yen as well. So key off of those commodities should be also variables you want to take into account. Let's see, do we have any questions out there? It doesn't seem like we have any questions from anybody. A couple of comments on YouTube there. All right, cool. Well, that is it for our weekly analysis, setting the stage for the rest of the week. We will see what happens after the close of today. We're looking for some buy and sell signals. Remember, if you want to download that NinjaTrader platform, you can just go to our products, courses, and services. And, excuse me, I'm sorry, to our tools button on our navigation bar, and right here at the top here is a Ninja online trading platform. From that tab you can download it yourself. In fact, here I'll show you how you do that. You just go right here, tools, NinjaTrader, and this will have information as far as what's going on with it. You can click on the banners, and then also here it shows you how to get the data and stuff like that. It's all free end of day, and for FX it's free. Then there's also, you can use this for stocks, futures, and all kinds of other things as well. So with that being said, I want to say thank you very much for your time today, and don't forget to like us and subscribe to our YouTube channel and our Twitch channel, Forex Trading Unlocked, and read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, to learn how to apply those buy and sell signals to any market, whether they're Forex market, futures markets, and what have you. So thank you very much. You guys have a great day.